Yo, 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 what's up, gentlemen? It's Wednesday, May 20th. How are we all feeling today?
Just another day in paradise.
Indeed, indeed. Yeah, I was just looking at the little bump in Bitcoin today.
Yeah, it looks like a little either interim bottom right here. We're on an 8 candle, could be a 9 bottom. It's like hanging out right at the bottom of the EMA on the daily. So if it goes down anything really below like 76, kind of the bottom falls out. It probably
I heard that I saw this guy who was going through a chart. And he said that 50 is incoming.
incoming.
Yeah.
Look, we have a kind of a ticking time bomb of what's going on, specifically with the American economy. And it's very weird. Obviously, Jerome Powell is out as the Fed chair as of 5 days ago. I think Friday actually was his last day. And I guess this guy, Kevin Warsh, I didn't notice, but I guess he's coming in.
Yeah, he got sworn in.
He did get sworn in. So yes, you got this guy coming in. But kind of the underlying thing that's very tricky that I noticed today is that the yields on the US bonds are over 5%. And what's the problem with that is that's how much the US government has to spend on its debt. And that rate is up. And the government doesn't like spending, doesn't like high interest on the US yields because or the treasury yields, because that's basically the cost of the interest expense on this exploding deficit spending that's happening in America, because obviously we have an American president who's just a nice proverbial kind of explanation is using the treasury as a piggy bank. And so we're seeing record deficit spending, and interest rates are moving to the upside. Inflation is explosive right now, and it's interesting because there's absolutely no movement going through the Strait of Hormuz, like no movement at all of trade. I actually just saw something even that the last ship to come out of the Middle East just landed in America, or maybe it was in California, and that's the last one. There's nothing else behind it. So yeah, we have some serious issues that you look at the stock market and you might be fooled to think that things are all good, because we're seeing some good prices in equities and even all-time high in the S&P. But but the underlying metrics are not good between inflation and bond yields, and so what there's some trade-offs there, but ultimately we're probably heading towards some sort of explosive shift to the downside, where you would want to see some real red across the board to help justify getting the interest rates lower. So
yeah, well, the only way to go down is to go up a little bit.
Yeah, you're not wrong.
Right.
I think the key is it's always hard to sell a green candle because people love to buy green candles and sell red candles.
Well, one of my friends, you all know him for many years. I was talking to him. He said that he was watching he follows me on social media, and he's like, you were one of the only people that were like calling the top when Bitcoin was at 125. It's like all my friends said it's going to 300, like we're going to 1 million, and you were the only one that called the top. He's like, and he said that his site is he's not buying until October. That's when he said his all of his buys are set for. He said there might be some stuff, but really where he's going to lean into getting back into his positions is in October, which
Interesting.
interesting.
Yeah, I think the key is like just start scaling some cash onto the side. You know, I mean, I think that's just the key. It's like things have been.
Well, you had to have already been doing that.
Yeah, but it's still a good time, you know. I mean, oh, you mean for Bitcoin? Like, yeah, if you want to scale out your Bitcoin position, yeah, that's you know, obviously Bitcoin's a little bit different, but I'm saying more on like the equities side and other ways that you can stockpile cash. Because yeah, it looks like there's going to be a buying opportunity at some point. This particular, you should go learn more about this Fed chair and like his, you know, his thesis. You know, what there's like some trade-offs in terms of printing money versus not printing money and where interest rates can be. And there's a ramification for not printing money. Actually, what's crazy is that under Trump's presidency, he printed I think it was like 200% more money than Biden did. I think Trump, and I could be wrong on this.
Doubled the money supply. During COVID, he doubled the money supply.
Right. Trump has printed more money than any president of all time, and maybe even more than many presidents combined. Maybe more than all presidents combined. I mean, it's literally, it's unbelievable. Trump also has added more to the deficit than any president in history. He added in his last term, he added more to the deficit than Obama did in all of his 8-year presidency. Trump did that in just one term. And he's already added another, you know, just in the first year and a half, he's already added almost another 5 trillion to, you know, so Trump added over 8 trillion in his 4 years. Obama added approximately 8 trillion in 8 years, but he also got us out of the financial crisis from the Bush Jr. era. And then Trump has already added another 5 trillion, obviously long term, but to the deficit just since he's been in office.
Well, he had to put 1.8 billion in his own pocket, so
well, that's different.
Worse is going to say a bunch of stuff about fiscal restraint and responsibility, and he's going to go print money because that's what they put him there for. And inflation's going to go through the roof. It's going to be, you know, $10 gas. And they're going to be like, well, we found a new way to define inflation where, you know, as long as and we're going to print more money because that's the only thing we know how to do.
Yeah.
And so I'm not sure that there's any red candles in the future except for really junk stocks. I think it's all going to be green because everybody's just going to be like, yeah, printed money. Let's go buy assets.
Well, it's an interesting philosophy or theory. And if you look at the charts, I think it's $11 trillion has flooded into the equities market in the last like 2 months or something like that as a result of whatever signaling is happening so, you know, markets are up. I mean, you know, Tesla's up $100, you know, Tesla's up, you know, a lot of, you know, almost every one of these stocks between NVIDIA, Microsoft, Amazon, Google, I mean, everything is up. Facebook, everything is up dramatically right now. And a lot of euphoria, but they also say these like blow off top, I forget what it's called, but when things are like just going up and up and up, and it's really hard to understand where the exit is because it can just also just go absolutely vertical, right? That last, you know, whatever percentage of the pump can just be, you know, can go parabolic. And so, you know, there's, you know, a lot of good history and kind of scaling out slowly rather than just pressing the, you know, close position button and just, you know, wholesale cashing out.
It's challenging to kind of predict what's going to happen when, like, if we had just assumed that they're going to print money like mad, like idiots, then okay, fine. People are going to take the money. They're going to go YOLO into assets. Dollar's going to lose half its value. Okay, fine. Assets are going to double because the dollar just lost half its value. There's that. But then assets are going to more than double because everybody's going and throwing all their money into assets because, you know, inflation hedge and so on. However, there are still some assets that are so bad that they're going to underperform even in this environment.
Yeah.
And like maybe, so you get this big bubble that because they just print a bunch of money, and so of course then the bubble gets bigger because a bunch of other people are trying to jump in on it. But then some assets are bad enough that it doesn't, and of course, assets that discretionary spending, that's going to go down because people don't have any money because inflation is taking away all their money. Their rent is their whole paycheck, and so they have no more money left. So discretionary spending goes down. So certain things are still gonna underperform, and so you get this situation where it's like everything going up, and then if you don't perform well enough, then everybody's like, "Well, that's not a bubble asset," and they pull out, and you just do this. So
Yeah.
very very difficult.
Yeah, I mean, look, obviously, if anyone could predict the future, you'd be a trillionaire, So, but putting proper hedges in and kind of trying to read the tea leaves, obviously is a key piece of the story.
I've heard. I just saw today that mining has a better margin right now than even like financials.
Mining like gold mining, or are you talking about like
anything, metals, important stuff, digging important stuff out of the ground. So you got to figure out, okay, is this something that's going to be damaged by contraction of the global economy because of oil?
Right.
Or is this gonna run because it's involved in batteries and everybody needs to buy an EV now because there's not any gas anymore?
Right.
That's the first question. But if you get past that question, mining is something that produces a real value, and there's a lot of stuff in the world that doesn't produce any value. So
yeah, no, it's a great point. Actually, interestingly, Jeremy asked ChatGPT to give him some stock picks. Maybe it was like almost a year ago now, and it put him into some rare earth companies, some companies that were targeting around rare earth, specifically with some of the exploration stuff happening around, Greenland and Alaska, and just looking at some of those opportunities, and they're all up. It really hit some like really solid stock pick recommendations.
Well, that's also like a geopolitical play, because all those rare earth companies that are based in the U.S. are going to go up because the U.S. is in a panic because China controls the rare earth industry,
right.
And so now the U.S. wants their own rare earth industry. So one way or another, there's going to be money going under the table that starts at the Federal Reserve and somehow ends up popping up in these rare earth stocks. So you can take advantage of that as well.
Right. Yeah, look, you're right. There certainly are going to be some great opportunities here. I mean, that's why you just want to have some cash on the side. If, look, it's a tough one to say that Bitcoin has, that where 50K is in play, because that would be really talking about a 50%, 40% drawdown from this price almost. Like that's a big drop. But yeah, we've seen it happen before, but I do think, there's always been a lot of confluence around the previous range high, which we know is like 68, 69,000. And that's really been the bottom, this time around for the most part with Bitcoin. So it seems like it's kind of adhering to that. And let's see, looking at this, yeah, we did go down. It very quickly taps, was at 60, which is a big drop off. And then we saw like a floor kind of form around the 65, 66. I do think there's a world, and there's a specific line that we could bounce off of that would put us back down into the 60 range. But yeah, it just seems like 50 is so far down. I mean, there is a big level at 52 that I guess there's always a world where that could come back into play. That would be a tremendous shift if that were to happen.
The question is, what else has to happen? Okay, so you can always wick down there, right? If you make a big enough panic, like the COVID lockdowns. Let's say they were to nuke New York. Now you would probably wick down there. Because that's a big panic.
Yeah, I see.
probably wouldn't have that much of an impact on the global economy in the long run, but it would be a big panic.
Yeah.
Now, but the question is, if you're talking about sustained, like how much other stuff has to break in order to get there? Can you get there and still have a functioning financial system?
Down at 50?
I tend to think that pretty much every bank that deals in US dollars is going to be underwater if you get sustained 50K Bitcoin.
Yeah, it's not sustained. I mean, none of this stuff's really sustained. It all kind of moves in flows, ebbs and flows. I mean, you're gonna, and 50 does, and I don't think anybody's saying 50 flat. Like, I don't think it's going all the way down to like 50, and maybe like the 50s is reasonable. But yeah, I mean, look, there's plenty of unknowns in the future. If we were all had a crystal ball, we'd be doing a lot of different things with our lives. But you know, when you look at these cycles and how they function, you know, we're in a bear market, and there's a lot of shit that happens in a bear market. And these markets, especially for crypto, are very fragile because there's no retailers in there. It's just bots trading with, you know, seasoned traders. And that's what controls this market at this point when there's no, you know, hopium involved.
Yeah, I was just seeing the FOMC is today.
Oh yeah, it's always when we're on our call.
Always on it. Yeah, I
just saw
it. Yeah, it says it's at is that right? 6 o'clock? Could that be?
Okay. Let's take a poll. Who is for raise?
There's no way.
Who's for stay?
I think it'll stay.
You think stay? I don't know what I think. Who's for cut?
Meeting today?
Yeah,
it's I just saw that there's I'm looking on TradingView, and it says that there's a FOMC minutes May 20th, 26 at 1800. So that's what, 6 o'clock.
I'm gonna go with stay, and the reason is because it would be unclassy to cut within 5 days of being approved.
Yeah, there's not an FOMC.
It's on June 16th.
Yeah, it's in June 16th.
Oh, okay, next month.
Okay. Right. Yeah, so next month.
Then cut.
Weird. It's weird that TradingView is showing that there is an FOMC thing, but it's not.
That'd be ambitious. Look, let's give a little bit of an update on where we are, and then we got a busy day. We got a ton of meetings today. We got like 4.
Yeah,
I have 2 in-person meetings today. So, but yeah, we're running and gunning here. I know that, you know, we have everyone's kind of chomping at the bit in the community. You know, we've given dates, we have not hit those dates, and we've given other dates and we have not hit those dates. So I can understand if the hopium is running low, but we are on track. We're deep in this deal. These M&As, I mean, this is my first M&A, and it's way more complicated than I ever could have imagined it to be. And but we have a good line of sight on how to get this deal completed, and you know, we're running and gunning to get that over. We were hopeful that we would be able to announce it at the Cannes Film Festival, but that didn't happen. There is actually a more relevant festival which could be the better place to announce it, which is Cannes Lion, which is more on streaming television and streaming focused, and you know, digital advertising and all that good stuff. Still in Cannes, France. So still come visit you, Caleb. But it's So anyways, that's kind of the lay of the land right now. I don't know if there's anything you want to add, Jesse, but
just kind of a little bit more clarity. So, you know, and it's kind of in the same place that it was essentially 2 weeks ago, where we completed the transaction, and there's a, you know, all the paperwork's done, all the due diligence done, everything's just held and holding. And there's a transition process where we have to complete several payment structures and then take custody of all the assets. So till that's done, we can't announce it. And yeah, that's just taking longer than we thought. We really did not expect to be in a situation where we'd have to, you know, spend this much time, you know, on a transitional period. But everything's just like imminent at this point. So we're just grinding to try and get it over the line. But yeah, we're right there, ready to rock. So hopefully, hopefully this month we're going to be able to release everything and get going. And we're just kind of waiting for that moment where that can happen.
So sit tight, and we'll keep updating you guys as we get closer and closer and closer.
Yeah, but man, we're just excited to be, to be right there. That's the next exciting shift. It'll be a big announcement. Everyone's kind of waiting to work on that piece of it, and yeah, we just need a couple stars to align at this point. But I think we've done all the heavy lifting at this point. Just just the last 1 yard on the pursuit to the end zone.
All right, cool. Well, thanks for the people that have tuned in. It'll be interesting when this is all over to kind of track all of these roundtables and the
yeah
of it all. But,
yeah, and also see how the community grows once we make this announcement, and kind of how that gets awareness of this and everything that we've been working on. So that's something we're certainly looking forward to.
Totally. All right, good to see you, boys.
Yep.
Good to chat. Politics, crypto, and packet.
Yes, sir. We'll see you guys next week. All right. Stay tuned.